Good morning, traders. This is day 5 of small cap market open day trading. I took 3 trades this morning right at the open. I'm going to show you everything that happened with those in just a moment, but just so you know what I'm doing here, I've been trading for about a year and a half now, but I've written a new plan, a new strategy for trading the market open with small cap stocks, and I'm testing that right now by just trading one single share on every single trade, because what if it doesn't work out? I don't want to risk a large portion of my account. So I'm just trading one single share. I'm keeping track of how much reward versus risk that I earn on all the trades. And then by doing so, we will know after 100 trades whether or not this system is profitable without putting a lot of money on the line. Previous to this, I did a mid-cap market test, and after 100 trades, it cost me about $4.99. So it's a great way to test out a new system without putting a lot at risk. So let me show you my screener first, and you can see how I pick these stocks. So I have a small cap screener set up right here. Always click those 3 dots, click modify. Otherwise, your filters will not be applied. And these are the filters that I'm using. This is the definition of a small cap stock right here, $300 million to $2 billion market capitalization. And then this is the price range that I'm choosing to look for stocks in. Most of them are definitely on the lower end so far, but we've only taken 10 trades. So then the next thing is I organize the list by volume, and I'm only interested in the stocks that are going up as far as the screener is concerned. So like ATER, I will put on the chart and check the daily chart to see if it meets my daily chart criteria. It did not, and I'll show you that in the video. And I think at one point BTU and TIGR also got checked. So there's one. So the one I traded on here, kind of, it looks like it eked out of the small cap range because it was right around. It was just under $2 billion market cap when I was trading it. So that's why you're not seeing it pop up here, but it was on this screener at the open. So let's take a look at the video now, and you'll see the trades that I took, and you can see me checking these stocks. So here's ATER. That was the #1 volume stock, but you can see it's below the 200 MA on the daily chart. So whether it gives a 2R trade after the open, I don't really care. This does not meet my screener criteria or my chart criteria for that matter. So I cannot take a trade on it, and I just move on and look for other stocks. If you make exceptions to your rules or exceptions to your plan, then your data is absolutely meaningless, and you won't know if what you're doing really works. So you have to stick to the strategy, stick to the plan every single day. So here's DVAX, and you can see that it is trading above the 200 MA on the daily chart, so that meets my chart criteria. And now I have to mark out the high of the previous session. That could be the pre-market, after-market, or previous day, whichever is higher. And then that's my first signal. Once that price has been broken, it's my first signal that there is strength in the stock. And I'll explain that a little bit deeper as we go on. So let's take a look here. So then here was BTU. That was another one that met the chart criteria on the daily. But something happened here as the price pulled back from this second break here, the second level, then it broke the ABCD pattern. Let me just show you that really quick here. So this red line here marks out the bottom of the ABCD pattern, and so that was broken, and then that means that I can't take a trade. I actually kind of messed this one up a little bit, but I don't think it would have mattered. I'll explain that as I go on. Again, this is 10 trades into this plan. The entry is quite different than the previous entries that I was using on the mid-cap market test. And so I'm still kind of working things out, and I'll show you what happened this morning. And actually, the trades I took on DVAX, they were all perfectly within my plan. They were the correct entries. But I want to show you some markings that I put on the chart to help me realize where I'm supposed to get in, because it gets a little bit confusing with this. It's not quite as simple as my mid-cap market open test. So let me just fast forward a little bit. I want to show you a few things. Okay, here we go. This will be a good time to take a look at some lines on the chart. So first of all, this first yellow line here is that previous session high. I think so. This one happened, I believe, in the pre-market this morning. So that's where that line comes from. Once that level is broken, that's the first sign of strength. Then I need to see a new high of day established. Well, so here's where the level's broken. So that's the first sign of strength. Here is the new high of day. and that is just kind of an arbitrary point. Not really. I mean, it's based on whatever that new high price. But what I mean is that I don't take an entry at that point. So I just mark that out, and I wait for the price to be broken again. I wait for that high of day to be broken. Now, once that high of day is broken, according to my strategy, that is when the stock has proven itself to be truly strong, that there is a lot of buyers here that want to push the price up. So that's when I need to start looking for an entry. And then the entry is once a new high has been established after that break of high of day. I know, like as I said, this is a bit confusing, but it kind of needs to be this complex in order to guarantee strength. And we'll see that play out today. So here's the second high of day. And now I need to see a pullback from that level. And then the first 1 minute candle that makes a new high after that pullback is my entry. So again, as I said, this is a little bit confusing. It's a little bit complex and difficult to master. But I do have this all written down. And once I've taken at least a third of the test trades and proven that it's at least break even, if not profitable and not dangerous, it's not going to blow up any accounts or anything, then I will upload this to my Patreon. That's patreon.com/tradingarmor. I have a few plans there already, trading plans. I have trading calculators, all that cool stuff. So right now I'm just waiting for this pullback to finish and waiting for a 1 minute candle to make a new high. That's how I know it'll be finished, at least, according to my criteria. Let's just ignore this little box that I put there because it doesn't really end up having any meaning, and I'll explain where the meaning was a little bit later down in that area of price. So here's my first entry. Let me back up to where I took the entry. Sorry about that. Here it comes. So we're waiting for a 1 minute candle to make a new high. And you can see here is like a double top. They both were at the same level. So the earliest I can get in is on this candle, and I think that's where the entry happens. There it is right there. So I just paused it. But you could see I triggered my hotkeys and back it up just a hair. And you could see that my hotkeys were triggered as soon as the price broke. I think 1774 was my ideal entry. So there you could see it didn't really give me a chance to get in there. It popped up to 1775. I hit my hotkeys, got filled at 1776. Not bad at all as far as slippage goes on a stock of this price. And then the most important thing is to move that stop loss up in place really quickly. Let me just show you that step. This is so important. Once you're in the trade, once your position bubble shows up, then make sure you grab that stop and pull it up, even if it's not exactly in the right place. Just try not to place it higher than it's supposed to be. So I always go below the previous candle or below a consolidation area. And then I'm using my 2-hour calculator, which is also available on patreon.com/tradingarmor. And that gives me my 2-hour profit target, it's very handy to use that calculator or some calculator, because when you're trading a volatile stock like this, it's very easy to make mistakes, make math errors in your head. And if they move very fast, that can really affect your trade, because either your target or your stop loss might get hit because of that error. So now we're in the very first trade. Now here's the thing with this stock is it ended up giving a lot of false signals, and but all of this criteria that I was talking about that tells me this stock is really strong did end up proving to be the case, and we'll see that as this video plays out. And I'll show you the chart in real time at the end, and you can see how this thing moved. So here it comes down. And you could watch this video. There, it stopped me out. Let me just show you that's getting stopped out in real time. You could obviously watch this video, look at this chart now and say, oh, well, you placed your stop loss too tight or whatever. It doesn't really matter. The way I'm trading here is exactly according to my plan, and I'm trying to test this plan. I'm trying to test this strategy. So if I do anything outside of that, again, as I said earlier, the data is absolutely meaningless. So all of these stops are placed in the correct place according to my plan, whether they get hit or not. And that's just the way it goes. More often than not, so far at least, this is working out, and this is a profitable strategy. So let's take a look now what happens next. So this red line here marks out the bottom of the ABCD pattern, and it's kind of debatable because there's a bit of a chop going on here. But if you look at the bottom of these candles, you can kind of see a clear move to the upside. So I decided to make that the bottom of the ABCD pattern. So this would be point A, this is point B, and then C looked like it was going to be here, but that was a false breakout. So C is actually still establishing itself. This is just some choppy price action on the way back down. So now we're waiting for the next entry, and let's see, the high of this candle is 1760, so I want to see 1761 or better on the price bubble, and that's where I'll trigger my hotkeys to get in. So let's take a look here. Whoops, let's see. This one moved really quickly up, so let's watch it in real time now. There, it popped up, and I kind of missed it, but as soon as I realized it, it was exactly where I wanted to get in. So I got in at 1760. I think I wanted 1761, so it was a good entry. And again, move that stop loss up in place really quickly because you don't know how quickly these things can flush down. And look what happened there. It came right back down and stopped me out. And you're probably going to be frustrated by this, but don't worry. This is my plan. This is all part of the strategy. If I don't test it or trade it exactly as written, then the test is meaningless. So I have to take those annoying stops when they happen. And let's see the next trade. So that's 2 out of 3 trades. I can take up to 3 trades. And if the third trade works out, it's considered a break-even day because I'm trading all or nothing to our risk management. So that means that my reward is always twice my risk. So 1 winner cancels out 2 losers. So here comes the third trade. Fast forward a little bit. Okay, it's right there on that next candle. It breaks out above the previous one. And there we go. And now I've triggered my hotkeys and I am in. And I move my stop loss in place very quickly. So 1747 is the stop. There is my position. And then again, once again, I'll use that 2-hour calculator to give me the correct profit target. And then just drag my profit target in place, 1771. And you can see that price is moving pretty quickly to the upside now. And that's it. We got our 2-hour profit target hit. And so that ends up being a break-even day. We lost 2 trades and we won the third. Now let's take a look at the chart in real time. This may annoy some of you that, you might think, oh, wow, you left all this money on the table. Again, I am testing a very specific plan and strategy. So all that matters is that I follow that plan 100%, no matter what the chart does. And believe it or not, I'm actually encouraged by what happened on this chart, and I'll explain why. So let's take a look at, this is where I entered the trade, right? And then my profit target was what was it, 17? I don't remember. But it was somewhere around here, 1771 or something like that. This is where I got hit. And then look what happened on this stock, on the price. And I am tracking whether or not this thing goes all the way to 3R. And if it does, I write it down. And then at the end, we'll know whether or not I should be holding out to 3R. So far, it's looking that way, but we're only 10 trades in, so we can't know for sure. But let's look at what happened here. Price just continued to go higher and higher. Small pullback here, and then went all the way to 1848. So huge move to the upside. If you're a newer trader, you'd probably be extremely frustrated by that. I am not, and you need to get to a point where something like this happening does not frustrate you, because if you let this frustrate you, it's going to lead to breaking your plan. You're going to revenge trade. And this is just one single trade out of so many trades that I'm going to be taking. So this doesn't bother me at all. In fact, it encourages me that my criteria to show whether or not the stock is really strong or not works, because obviously there was strength. It's just unfortunate there was some choppy price action here and some false breakouts. So there's nothing I could have done to avoid those first 2 losing trades, and nothing I could have done to avoid missing out on, a big chunk of this move or whatever. It just is what it is. But again, I'm encouraged. And the important thing is not to just kind of hold and hope, because you never know what's going to happen. This thing could have just continued down, and you could see that, after making that new high, it pulled back considerably. So if someone was holding up here thinking, oh, who knows where this thing's going to go, maybe $20, maybe it is, I don't know that, but the key is that you have to have an exit plan, because I'm sure whoever was holding up here, if they sold out as this thing just kept coming down further and further and further, maybe they entered over here on this pullback and now they lost money on this trade. You can see how things can turn around, even if you get in the right place, if you don't have an exit plan. So anyway, hopefully this video was helpful to you. If it was, hit the like button. If you haven't done so already, subscribe. Last thing I'll show you the spreadsheet so far, since we're still really early on. We've only taken 10 trades, and today is the 22nd, so that's right here. So you can see I put in a break even. Break even is 33% on this type of risk management, because it's all or nothing 2R. So let's just scroll through and we'll see the third trade was the one that worked out, and there it is right there. So now the statistics so far, we've taken 10 trades, we're up 4R, 4 times our risk, which is really ideal, because my ideal goal would be to be up 2R after 10 trades. That would equal 20R after 100 trades, but we're already up 4R, so that's pretty nice. And then if we would be holding to 3R, which may be something we will do after we're done testing this, we would be up 8 times our risk already. So if you're risking $10, you'd already be up $80 at this point. If you're risking $100, $800, so on and so forth, just after a few days of trading. And the cost of this test is it's not costing us anything right now. We're actually making money off this, even though that's not the point. And the win rate so far is 50%, which is very profitable. It doesn't mean a lot after 10 trades, but 33% is break even. So my long-term goal is 40% or better. My long-term goal, I should say, is profitable. The plan is profitable. But my ideal goal would be to maintain a win rate of 40% or better. So if we do that, that's great. If we stay higher than that, even better. And you can see the statistics so far for trade number 1, 2, and 3. These numbers are really meaningless at this point, because we've taken 10 trades, but we've only taken, 5 trade number 1s, 3 trade number 2s, and 2 trade number 3s. So that's that. And I don't think I updated this number, so that doesn't mean anything yet. So anyway, the other thing that I'm tracking here that is also helpful is when the first trade fails, how likely is the second and third trade to go to 2R on the same ticker? We've done that 3 times so far. How many times did it go red to green on the second trade? Just once. And how many times did it go red to green on the third trade? 2 out of 2 times, so every single time. But again, those numbers are really low. We need more data before we can say any of this is definitive or conclusive. So, all right. Let me know if you got any questions about this. These type of plans and spreadsheets, they're all available at my Patreon page. The small cap plan is not there yet, because as I said, I want to take it out to 33 trades to make sure it's safe, and I will not declare it actually profitable until we've taken 100 trades with it. So as always, go into every single trade with a plan, stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.